Dr. Kim Anderson, our crop marketing specialist, joins us now. Kim, what's the latest news in the crop markets?
Let's start with China. The United States and China signed a trade agreement. The market's semi-excited about it. We'll have to wait and see what comes on there. Ukraine, they're shipping grain and products out of that export corridor that they created. Russia doesn't seem to be disturbed about it, and so that's working relatively well. You got Australia. One part of Australia is too wet, another's too dry. USDA's got their production around 900 million bushels. Last year's 1.33 billion bushels. The average is 1.03, so slightly below average there. Argentina, they've had some production problems, too dry, too wet. 1.14 billion projected, 1.26 last year, average 1.16. So slightly above or below average production in Argentina.
Talk a little bit more about this agreement with China. Help us understand it and potential price impact.
Well, if you look at that agreement with China, that just really says that they're going to buy more products from the United States. They did come in and buy soybeans this week. So I think the market believes it's just kind of a marketing ploy or a political ploy. It looks good. It may not change things very much. When China needs a commodity, they come in and buy it.
Did any of this market news impact wheat prices?
Not positively. You look at wheat prices, I mean, for the full month of October and go back through September, we've been trading $6 to $6.30. This week we did see some weakness in wheat prices. Got below $6. It got below $6.60 on the that December contract. I think that's significant. I think we had support at that level and we're losing it. But if you look at the world, 28.8 billion bushel, not a record crop. The record crop's 29 billion last year. You've got the ending stocks for the world, 9.5 billion, average 10.3. So tight world stocks and tight U.S. stocks. So I'd be a little surprised at a big move down, but right now wheat prices look weak.
How about corn and soybean harvest? Any price impact there?
No, I don't think there's any. You know, we did have China buying. We got a little blip up in price, but insignificant. Corn prices, you know, somewhere around $4.67 plus or minus 10 or 15. Not much going on there. The harvest going on. Oh, it's coming in relatively large. We got the ending stocks for corn projected to get well above average. World production, a record or near record 47.8. Lots of corn, and that's why we're seeing these weaker prices and below average prices. Soybeans, the beans are coming in as expected. The world stocks the U.S. stocks are tight. The world stocks are above average. So a lot of uncertainty there in soybeans, but a good price, and it looks like it's going to hold for a while.
And last but not least, how is cotton looking?
You look at cotton, they're just staying around that 82 to 85 cent level on that ICE contract, around 80, 81 cents in Oklahoma. You look at their production world, 79.9 million bales. Their last year was 83.1, so a lot of cotton being produced, but relatively tight stock. So a good price.
Alrighty, Kim, lots of great information. We'll see you next week.